Hello and welcome to today's update. Today is 10th of November. You're looking at a daily chart of S&P 500. S&P 500 had a massive day. It was up over 5.5% to close at 3956. Nasdaq was also up almost 7.5% to close at 11,605. Now, the purpose of this massive rally was obviously the inflation report. So let's quickly have a look at the inflation report and see what the numbers were. So the Commerce Department reported inflation year over year as well as the core. The inflation year over year rose 7.7%. Market was looking for an increase of 7.9 to 8%. So obviously it came in better than what the market was expecting. Previous month it was 8.2, so you can see there was a big jump from 8.2 to 7.7. The core also fell. I think that this was very important. The core, which excludes food and energy, came in at 6.3%. Previous month it was 6.6%. So these were well above market's expectation. Now, if we look at this chart, you can see that that CPI was stuck in the 8 range for a long period of time. For the first time, we have a reading below 8%. You can see that the high reading was 9.1% back in June. After that, there was a big drop to 8.5, and then it kind of hung around 8%. But then this big drop, it basically was caused the market to rally. Because there was a lot of people who were betting that the number would be hotter than expected and market would crash. Everyone basically was expecting, everyone was on the short side. There wasn't, enough people on the long side. And that basically short covering, new buying fueled the rally. And as S&P 500 was up 5.5%. More importantly, S&P 500 closed above this level. This was the previous high, which was around 3,900. So now that it's gone through this level, the question is, what can we expect going forward? So if I bring in the moving averages, so you can see that today's rally pushed it above the daily 20 and 50. And then I think the next target is this 200-day moving average. This is around 4,082, which is roughly 130 points above where it is. I think this is the next logical, because I don't see that much of structure between the current price and that level. So I think the next logical place would be to retest this level. So I think that's basically where we are heading. If you look at the momentum indicators, MACD, which is just at the zero line, it's been coming up from below the zero line, and it looks like it wants to move above, and that would be positive, because anytime momentum MACD crosses above the zero line, it's always positive. It shows positive momentum. RSI is also moving higher. It's managed to get back above the 50 level, which is positive. So the momentum indicators are supporting the market. If I just quickly look at the weekly chart, just to see with 1 day remaining what the weekly chart is showing. So you can see that this is the green candle. This is this week's candle. You can see that this candle is right now above the previous 2 weeks candle. So that would be bullish. So as long as we don't pull back tomorrow, this would end up being a very bullish weekly candle. Also, I'm noticing that MACD on a weekly basis looks like wants to cross. So it's like forming a double bottom. I mean, it's still below the zero line on a weekly basis, but that will take some time to work its way up. But it looks like it wants to cross. I can see that histogram is just ticked up above the zero line. You can see the weekly RSI has been moving higher. Since forming this double bottom pattern, right there, you can see that if we close above this level, it would make a higher high. So that is also looking positive from a weekly point of view. So tomorrow would be important. As long as we don't have any sell-off tomorrow, I think the weekly pattern is gonna also confirm the bullishness in S&P 500. So that's looking quite well. So let's quickly have a look at SPY. Similar. So SPY is gone through this level. So the SPY's equivalent 200-day moving average is at 407, which is right here. So that would be the logical place for it to go and test. You can see that previously it did test in August and was unsuccessful, because that's when it went up from a very low number, 371, all the way to 431. It just did so in one long swoop. I think that was the problem. But right now what's happening is that it had gone up and then pulled back, and now it's making another run. So if it had gone all the way up to here, then there would be a chance that we could have a failure at that level. But now what's happening is that it has gone up and then it paused. It pulled back for a few days, and now it's making another effort to go and tackle this one. I think because it's starting from a lower base, I would give it a better chance of overcoming this level. But obviously we'll have to wait and see. But it looks like that would be the next logical place for it to go up to. If we look at what's happening on the technology side, this is NASDAQ 100. Now, NASDAQ is a little bit weaker than S&P 500. So you can see the NASDAQ chart is not as strong, but it is improving. So I've got a box right here. It's been spending a long time in this zone. So you can see the double bottom pattern forming. So we need to see NASDAQ close above this level. So this is basically 11,680. Let's call it 11,700. So this would be an important level. If it closes above this level, then this double bottom will be complete. So NASDAQ's next area of challenge would be this level, which is around 12,000. And above 12,000, it brings this high, which coincides with the 200-day moving average. Now the momentum indicators, RSI is moving higher. It's gone above the 50 level, which is positive. MACD is still below the zero line, but I think it's making a cross here, and it's going to challenge the zero line. So if we have another few days of positive activity, I think MACD can go above the zero line. That would be positive. If I just quickly look at the weekly chart just to see what sort of pattern it's developing. So again, it's not as strong as S&P 500, but even if it closed today, if the market had closed where it is today, it would basically be above last week's high. Last week's candle was a bearish candle. So this week's candle basically would negate that entirely. So that's basically looking positive. So if tomorrow it can close above this level, let's say 11,700, the weekly chart would be quite positive. The MACD hasn't crossed. Looks like it wants to cross, but it still remains below the zero line. So we need the weekly. So it's going to take some time for the weekly to get above the zero line. The weekly RSI is moving higher, so that's good, but it's still below the 50 level. So we want to see weekly RSI get above the 50 level. If we look at the corresponding chart for QQQ quickly, so similar. So it needs to get through this level, which is around 285. Let's look at the daily. So it would be this level. So the high of this candle is 284.60. So let's call it 285. So if it closes above 285, it's going to clear a lot of this resistance right here. And then this level would be the next area of challenge around 292, 293. And then the 200-day moving average is around here, 310. So 265 and then 293 and then 310. So those would be the levels for QQQ. You can see that double pattern form is forming. So that's also looking quite constructive. If we look at other markets, so let's quick at dollar. So I've got S&P 500 on the top and DXY on the bottom. you can see that DXY has been making a lower low, and then today it broke below this level. And obviously you can see with DXY making a new swing low, S&P 500 has made a new swing high. So they're kind of, they move in opposite to each other. So if DXY closes below this level, so this is the low 107.68, then that would be the next area, 104. So this chart is looking quite weak. Let me just quickly look at the momentum indicators, just to see what the momentum indicators are saying. So just go back to DXY and bring in the momentum indicators. So you can see that MACD is fallen below the zero line. So this is the first time it has fallen below the zero line. You can see right here when MACD pulled back to the zero line, it moved higher. Right here again it did the same. So this is the first time it has fallen below the zero line this year. So the momentum indicators are showing weakness. Look at RSI. RSI is now below the 50 level, so that's looking weak. So that suggests that we might have a little bit more weakness in DXY. So let's go back to our comparison. So I just bring S&P 500 and then right here. Let's look at the yields right quickly. So we'll start off with the so this is the April Fed funds future. You can see they're also coming down. So they traded as high as 515. It closed down 15 basis points to 4.85. So the market after today's CPI report is not expecting Federal Reserve to increase Fed funds rate above 5%. So they think that Fed funds rate would be below 5. In coming days, we'll see like where the market is shifting their expectation. There are some talk that Federal Reserve may stop at 4.5%. So it could be between 4.5, 4.75, somewhere in that neighborhood, especially if CPI starts to come down. If I look at the other Fed funds futures, the June one, it's at 487, so that's below 5. The September one is at 475. The two-year closed at 432, down 25 basis points. Big drop in 2-year. So 2-year maybe 4% is possible. If I look at 10-year, 10-year is also coming down. 10-year was down 28 basis points today at 3.8. It's now below 4%. So this is 3.5%. So maybe between 3.5 and 3.6 probably it would be the next downside target. So if yields continue to come down, that should only be positive for S&P 500. You can see that yields made a new swing low, and that basically meant that S&P 500. So this is consistent. So yields are also providing suggesting that there could be some more gains in S&P 500. If we look at volatility, VIX continues to fall. That's because the market is not making any new low. If the market was making S&P 500 was making a new low, I think the VIX would spike. Right now the VIX is S&P 500 is more settled. It was trading in a range for a while, and then today it broke to the upside. So that's why we haven't seen a massive spike. A lot of people were expecting waterfall after today's CPI report, but that didn't happen. So this would be, it can gradually move lower. 2270 would be the near-term level to watch, and then below there, 20 would be the lows that we saw in mid-August. So that coincides with this high right here. So that's also looking like it wants to go lower. If we look at some of the sectors in S&P 500, just to get some idea. So this is XLK. XLK is the largest sector in S&P 500. You can see XLK made a new swing high right here. So it looks like it has a little bit more to the upside. If this moves higher, it's going to put upward pressure on S&P 500. So this, because technology has a big weight in S&P 500, so that's looking good. Even though Nasdaq 100 didn't make a new swing high, but XLK did, so that's positive. If you look at XLY, so this is another important sector, growth sector. It hasn't made a swing high. This sector has been weak. It was up over 7% today, but remains well below the previous swing high. I think it can also move higher. So if it moves higher, this would put upward pressure on the S&P 500. XLF is the next area. This is a big area within S&P 500. Financials. You can see financials are moving higher, making series of higher high. So that's positive. Financials actually were holding up S&P 500 during this decline because they didn't come down. Even though the technology and XLY, they were pulling back, but XLF wasn't. So it was offsetting some of the weakness in XLK and XLY. If it can get through this top of the range, that would be a big, that would basically, take out all of these consolidation. That would be positive. Means that there's, S&P 500 could see more to the upside coming from contribution from XLF. XLV, this is healthcare. This is another big sector. You can see that it was trading within this range, and today closed slightly above this range. So this is also going to add positive pressure to S&P 500. XLC communication, they were weak. Facebook, Google, they basically kept this sector down. But today had a good day. It was up 6%. Still well below the previous high right here. But if it can move up a little bit more in coming days, that should bode well for S&P 500. XLB, this is a small sector, but nonetheless, it's on a strong uptrend. So that's also contributing positively to S&P 500. So this would be the next area around 81.80. If we look at industrials, so very strong move to the upside. That's also helping S&P 500. So this would be the next area of resistance. Next would be the utilities. So you can see that it's been moving higher. It formed a flag and bullish flag and then broke to the upside. I mean, it's not a big sector within S&P 500, but any contribution would be helpful. So again, you can see that utilities are also moving higher after a massive decline. So that's positive. XLP, this is staples. So they're also moving higher. You can see that it also had this bull flag. So it's just moved to the upside. So that's also looking quite positive, which means that it will contribute positively. XLE, this has been one of the strongest sector. So it's still moving higher. It's consolidated in the last few days, has the look of a bull flag. So if it can get above this 93, then this uptrend can resume. So that's also positive for S&P 500. Real estate, small sector within S&P 500, but that's also after a big decline started to move higher. You can see that it has the inverted head and shoulder pattern, with expectation that the Federal Reserve may not increase interest rate that much. The real estate sector has acted strongly today. I just want to quickly have a look at Dow and Russell 2000. So just look at Russell 2000. So this is Russell 2000. So this one hasn't made a new swing high. So if it closes above this level, that would be positive. And I think the 200-day moving average also comes into this. So that's also looking positive. It's making series of higher highs. I think the best one is Dow Industrial. So if I look at Dow right here, you can see that strong move up. It's through the 200-day moving average, and then if you look here, you can see that there's this downtrend going back to the highs of early this year. It has now gone through this level. So if it can stay above this level, that will show that the market is comfortable with Dow breaking through this downtrend. So of the 4 major averages, this is the only one which has broken through this downtrend so far. You can see that MACD is now crossing above the 0 line. That's looking positive. RSI is being moving higher. If I just quickly look at the weekly chart, you can see that MACD has crossed and it's now moving towards the 0 line. So that's looking positive. RSI on a weekly basis is well above the 50, so that's also looking positive. So this chart looks quite strong at the moment. If it doesn't sell off tomorrow, this would be a weekly bullish candle. The current week's candle would be quite bullish. All right, so that's all for today. Thank you very much for watching the video.